It's Thursday, January 24th. Welcome to Market Foolery. I'm Chris Hell. Joining me in studio from MFAM Funds, Bill Barker. Thanks for being here.
Thanks for having me.
We've been in the studio for close to at least 15 minutes, I would say. I was going to say close to 20. Maybe it's close to 20. Had a very lively discussion about the recent Baseball Hall of Fame inductees. And now we're going to move on to the business portion of the show. The baseball, that discussion is lost forever. We're going to get to McCormick. We're going to dip into the full mailbag. We got to start with the airlines, though. Southwest, JetBlue, American, Alaska Air, they're all reporting. They're all up. Do any of the four stand out to you? Because when I saw all of this taking place this morning, I thought back to a report I saw on CNBC. One of their reporters that I really like a lot is a guy named Phil LeBeau, covers the automotive industry. He had done a sort of a preview of 2019 about the airline industry and was pretty bullish on airlines. And certainly we're seeing that play out in these four stocks today.
Yeah, they're all up about the same amount. I think as a group, you're seeing that the airlines are, to generalize, they've got a healthy business environment. Last year, all of their stocks suffered, some more than others, and some down sort of in the low teens and some up to 40% in terms of their stock price. And that wasn't because business fell off a cliff. It was more that the operating margin was hit by increased fuel costs. And despite how well the numbers have come in really for the year, this is a highly cyclical industry. The profits are highly cyclical, and they don't trade at very high multiples.
And certainly this comes against the backdrop of the government shutdown, which has entered its second month. TSA employees certainly playing a factor in this. And as we were talking about earlier this morning on some of the conference calls, rightfully so, you had the executives of these companies talking about the effect of the government shutdown. And presumably the longer it goes, the more of a drag it's going to be on the airline industry.
Yeah, certainly you've got a lot of people who are right now trying to figure out how to pay the bills, so they're not going to be booking fares that are optional, and particularly for Southwest, which is much more dependent on leisure travelers than business travelers and very price-sensitive travelers. I would expect them to maybe take a bigger hit than American or Delta or something like that. Also, Southwest's got one of its big hubs at BWI, so they're perhaps a little bit more exposed. Everybody is exposed, and certainly if worse comes to worse in terms of TSA agents not being there to keep the lines manageable, then yeah, you might see that trickle into people's purchase of spring vacation, which is already heavily impacted this year by the placement of Easter, as you know.
Because it comes late this year.
Yeah, the first full moon after the vernal equinox is late this year. So is Easter.
Okay, if you say so. I'm not up on the moon phases like you are.
Well, let me help you out then, because I
did get a chance to see the super wolf blood moon, or what I forget the order of those words.
Yeah,
but
do you know why that was the wolf moon?
No, please enlighten me.
It's just the January full moon in the Native American vernacular.
Okay.
So that every month has got its own cool name for the moon.
Okay.
February, we've got a snow moon coming.
Okay, so it's a wolf
whether
moon.
It snows or not.
It's a blood moon because it turns red at some point, and it's super. Why? Just because it looks so big?
Just branding.
I don't think it was branding.
PR.
I think it
PR.
I had heard it was an actual scientific term from the moon people.
More likely the moon just hired the right people to get that one out there.
Smart, very smart.
And then October, you've heard of the Hunter's moon. That's October. Okay. The harvest moon in September.
Yes.
But nobody ever talks about the beaver moon in November or the sturgeon moon in August. They need to work on their branding.
The sturgeon moon needs a complete overhaul. They need a rename.
Or the Strawberry Moon in June. But to get back to something that is in some way related to business.
Thank God.
What we are talking about is the movement of Easter. And last year, Easter was on April 1st. So you got a large chunk of the spring vacation travel happening in the first quarter. This year, what is it, the 23rd of April?
I think that's
Easter.
right.
So because it's the first Sunday after the first full moon after the vernal equinox, and so it's very late this year, and that's going to push a lot of business into April that otherwise was in March. And so on a year-over-year basis, look for the airlines to have, to be talking at this time next quarter, 3 months from now, like, hey, remember, we said that Easter was going to affect our bottom line.
I get that with Southwest, JetBlue, American, Alaska, all four of those stocks are up today. And as you said, all about the same amount, all up around 4 or 5%. I will just point out, however, that this caps the 46th straight year of profitability for Southwest Airlines. And I think if you're, literally any other airline, you might want to take a look at what Southwest has been doing for the last 4+ decades, not just in terms of the culture on the planes and the attempt of the crew, and I would say the success of the crew in having a little bit of fun to make the in-flight experience a little bit more enjoyable, but also just basic things like, you know what? Typically when people fly, they need a piece of luggage or two. So we're not going to charge people for those first 2 bags. We're not going to nickel and dime them on fees. That appears to be working out in terms of, again, 46 straight years of being profitable.
Yeah, Southwest does stand apart in terms of the consistency of its performance, and it's having been at some points identified as being the only airline that you would have done well to have invested in because of the tendency of airlines to go bankrupt on a frequent basis.
Right.
And that's one of the reasons why, despite very good numbers this year, it's trading at about 8 times earnings. And that's because when the cycle goes the wrong way, not only will profits decline. So you can't just build a model where you say, well, we'll look at today's numbers and maybe they'll make 5 to 10% more next year and the year after and the year after that, as you might choose to do with some businesses. And you would be close to accurate with some longstanding businesses that had predictable histories. The downside is, hey, when things go bad, these things tend to be worth zero. And everybody has seen the experience, and basically everybody's gone bankrupt at some point or another other than Southwest.
Let's move on to McCormick. Fourth quarter profits for the spice maker were higher than a year ago, but lower than expected. And the stock, which has had a good 12 months, sold off this morning. Shares of McCormick down about 13%. Is that, I guess I should ask, how much of that is due to the run-up that the stock has had?
I would say more than half, if I had to throw a percentage on it, because it was up, I want to say, somewhere in the neighborhood of 30% last year. And that wasn't because the business grew 30%. It did have the acquisition in the middle of 2017 of French, and that supported the growth numbers that showed up in the first half of last year.
Frank's Hot Sauce.
Frank's. And I think that you're looking at a company which just reported 1% sales growth, and it's trading at about 25 times earnings. Well, all right, it's translating that 1% sales growth into greater earnings per share than that. But how are you going to justify a 25 multiple on something that grows the top line at 1% indefinitely? Well, maybe they'll make more acquisitions like Frank's, but they need to, because the market for spices itself is not going to grow very fast.
They pay a nice dividend, though. I mean, if you're listing out reasons to buy McCormick, I would put somewhere on the list. They pay a dividend, and also, if you put a gun to my head, I couldn't name another. I don't know who is the Pepsi to their Coke.
No. And so they are in a dominant position, not only under their own brand name, but in their supply of a large chunk of the competition. That is, a lot of the store brands are really supplied by McCormick and private labeled. So there isn't much of a number two player. Nevertheless, hey, 30% stock price return last year is hard to repeat when you're not growing very fast.
Our email address is marketfoolery@fool.com. You can also hit us up on Twitter. If you're on the Twitter, @marketfoolery is the show's handle. A question from a longtime listener and friend of the show, Chet Felizik, out in Seattle. Chet asks, are the giant swings that we see in stocks these days historically similar to that of the pre-quant era, or is this new? I remember giant swings being big news even 10, 15 years ago, but now it seems daily we hear about 10 to 30% drops or gains in stocks. You're the analyst in the room, but when I saw this question from Chet, I just thought to myself, yeah, that seems directionally correct, just with quant trading being what it is, algorithmic trading being what it is.
So I don't have the data to tell you whether the percentage of stocks moving up on a daily basis or down by some number, 10%, 20%, has increased. It probably has. One of the reasons for that would be that the number of stocks that are biotech, or something that reacts to an FDA clearance or rejection is greater. There are a greater number of things in the sort of exploratory phase, and they will go up 50, 80% on good, bad news. So that's a small sliver of the total out there. There was very little volatility for the market as a whole, going into the third quarter of last year. That changed at the end of the year. So, there could be some recency bias on it feeling like right now things are moving. The market itself has been a lot more volatile in the last 4 months than it had been. The quant thing, yeah, that's out there, and I can't say that I have the data to, support or reject that thesis.
Well, and certainly don't discount the effect of social media and media in general, the speed with which information travels. We're just more aware now, also operating in a universe where there are fewer publicly traded companies in the United States than there were 15 years ago.
Yeah, I think that another item could be, in terms of things going down on a daily basis that don't end up really changing the story of the stock, but ends up being a lot of volatility, is the short seller reports, which have been out there, but I think that they are more sophisticated in getting that story out, which can create some one directional pressure on a stock in the terms of one day, which is then oftentimes reversed over the following days. So there's more of that. There are more rewards to getting a story, even if it just takes hold for a very short period of time. There are more people involved in trying to profit off of a one-day movement of stock. Also,
Wes Yee and a couple other listeners flagging a recent story near and dear to my heart, and that is our good friends at Mondelez, particularly in the Oreo division, up to it again. Their latest limited edition Oreo is something called the Most Stuff. And it's like a double stuff, but it has, I don't know, anywhere from triple to quadruple the amount of cream filling. And it does not look good. Unlike the Oreo Thins, which I was actually in favor of, because, you get a little more of the cookie there on a ratio basis. But now it's just like, well, at some point, it's not going to surprise me at all if they just start selling like small tubs of the cream filling, the Oreo cream filling. It's just like, look, we know you want this. We'll give you a plastic spoon to go with it. Here you go. Enjoy, America.
Yeah, no, I think you're right. I think that's where this is going. Much more likely than that they'll, although maybe they do this, just sell the cookie part.
Yes, that's true. Yeah, I think that's right.
You're more into the cookie than the filling.
I want a little bit of the filling. I don't need quadruple the amount of filling. This is,
It's not about need.
This is like when razor blades, and you and I are old enough to remember this. I mean, you're, good 40, 50 years older than I am, but old enough to remember when it came to shaving razor blades, there was the single blade, and that went on for a very long time. And then it was, someone came out with a double blade razor, and then triple, and then 4 blade, and then 5 blade. And I would argue those are improvements. I would argue the 4 times the amount of cream filling in an Oreo, not an improvement. They're looking at what
you don't know yet, though, do you? You haven't tried.
I'm not going to try this. No. They're looking.
This is where you take your stand. You've taken your stand against basically everything except the straight Oreo, the thins.
The thins, sure.
How many other Oreos have you tried?
Let me be clear. This is about business spending at Mondelez run amok. This all comes down to the business. They've got the number 1 selling cookie in America. They've got the number 2 selling cookie in America. And they're just like, whoever's running the Oreo division is just out there saying, hey, look, I'm crushing it. I've got the top 2 selling cookies. Give me a bigger budget. I want to create more. I want to explore my inner artists and come up with different flavors and that sort of thing. And the spending is run amok. And Mondelez shareholders are doing worse because of this type of attitude in the Oreo division.
Explain to me how the spending changes when you repackage the same materials in a more stuffing to cookie ratio.
We got to advertise. We need more money for advertising.
No, you're supplying the advertisement. Do you think you're going to go to the Super Bowl and see commercials for this?
Possibly.
I mean, all right. I'm willing to bet on that.
Producer Dan Boyd wants to jump in. Dan, do you have a thought?
Yeah, I hate to do it, but I'm going to agree with Barker here. This is absolutely ridiculous. This is the same thing as saying like Taco Bell shouldn't innovate with their stable of Mexican-themed ingredients to make whatever ridiculous food that they can to delight the people of the United States of America. This is saying like the iPhone shouldn't get better. It's already good enough. This is saying like cars shouldn't get safer. They're already safe enough. What are you doing over here?
Wait a minute.
He's just trying to get the darn kids off his lawn.
I was with you on the Taco Bell point. And by the way, I did see an ad on television this morning. The limited edition nacho fries are back for Taco Bell. So Yum shareholders should be happy about that. I was with you, Dan, on that. But the moment you equated what the Oreo people are doing to car safety, like, no.
This is the kind of thinking that kills innovation. And innovation drives business, Chris. Everybody knows this.
I can't think of a better place to wrap up than there. Bill Barker.
5 minutes ago, probably.
Yeah. Oh, yeah. Hopefully people dropped out 5 minutes ago. You can read more from Bill Barker and his colleagues. Go to mfamfunds.com. That's mfamfunds.com. And if you want more of producer Dan Boyd, get on the Twitter and follow him. Thanks for being here.
Thank you.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you on Monday.